Have you ever wondered how to profit from sideways markets? In this video, I will teach you how to identify and trade rectangular patterns with ease and confidence. Rectangular patterns, also known as consolidation zones, are crucial for spotting breakouts and reversals. By the end of this tutorial, you will know how to trade rectangular patterns like a pro and avoid common mistakes. What is a rectangular pattern? A rectangular pattern forms when the price moves between horizontal supports and resistance level, indicating a consolidation phase. It helps traders anticipate a breakout or reversal, providing lucrative opportunities. How to identify a rectangular pattern? The key characteristics of rectangular pattern are parallel support and resistance lines, multiple price bounces within the range, and decreasing volume during consolidation. Let's quickly look at how to trade a rectangular pattern. First, let's look at breakout trading. After this sustained bullish move, price got to this place and buyers took a breather. So, identifying the rectangular pattern, the characteristic is that it is formed within a resistance and a support line. So this is how you identify a rectangular pattern. So in a rectangular pattern, price bounces from the support line to the resistance line, bounce off support line to the resistance line again. So how do you trade this? You can trade right this range from the resistance here down to the support. So you either sell at the resistance here while price is here until you get to this place and take your profit here, or you buy from the support and sell at the resistance level. One thing you should know is that rectangular pattern is a continuation pattern. So you either wait for a breakout to the downside or you trade within this range. So for us to trade this rectangular pattern, we need to wait for a breakout. So let's see our next candle close. You can see clearly there is a breakout. You can see how healthy the candle is. A very strong bullish candle. So we have received our confirmation. I can see the volume. So this shows that this price is taking off. So we'll look for opportunity to buy within this zone. After that, what do we have? See, the next candle close, we have a bearish candle close, which at this point should have entered this trade. And after that, we have a bullish rejection again, and price came down this low. So price has given us opportunity to enter this trade as it is now. Let's see. After that, what happened? Okay, we received a better buying opportunity. It was offered at a much cheaper rate. So if you do not buy at this level and you bought at this level, that'll be much more better. So after that, what do we have? Price. See, price took off. See, price has taken off. So how do you make an entry? Like I've said, your entry should be within this zone right here. This zone right here. This is where your entry should be. And your stop loss can be somewhere around here, just beneath the breakout candle, which is this. Your stop loss can be here. And how do you determine your target level? Your target level should be from the resistance line to the support line. You use that, you take that, and you measure it. You can see. So you measure from here to here and you extend it from the breakout to this point. So this is where your take profit should be. So if your entry is in this zone and your stop loss is here and your target level is here, this is like 1:4. 1:4 risk to reward ratio. So this is a very good trade. So this is how you trade a bullish rectangular pattern. So it's the continuation pattern. So immediately price comes in this way, you should be looking for price to head in this direction. So this is how you trade bullish rectangular pattern. So let me quickly show you an example of how to trade the bearish rectangular pattern. So after this sustained bearish move, what we have, price came and start acting between this support here and this resistance here. You can see how price is bouncing. See, price is bouncing. So you can either head this way or this way. And like I said previously, rectangular patterns are usually a continuation pattern. Yes, you can trade it in a range. You can trade between, this is the daily chart of Euro, Canadian dollar. And if you go down to a lower time frame, you can find a good setup which you can trade within this range. But as it is, if we are trading this, then we should be watching out for a breakout. And if we are watching out for a breakout, then it should be a breakout to the downside. So after this, what we have, you see, the next candle close, we have a breakout. And what happened? After price broke out and got to this point here, what happened? It still closed right inside the rectangular pattern, which shows is a fake out. Just as we have here, we have a fake out here, and we also have another fake out here. So when you are trading this, you don't need to rush into this trade. You have to wait until there is a genuine breakout. So we have to wait more. The next candle, we see there is a healthy bullish candle. You can see it's an engulfing candle. This bearish candle engulfed this entire bullish candles, and you can see it closed below the support line. So this is a clear sign of breakout, and you can see the volume. So at this point now, we should be looking for opportunity to sell this bearish rectangular pattern. So what we have after that, you see price came all the way to this point. So this is a good setup. And what we have after that, see, we have another bullish close right inside the rectangle. So if you've not entered at this point, price has given you another opportunity to enter right here. After that, what we have, see, a better opportunity was also given than this bullish candle close. Price got to this point. Let's keep watching. See, price kept on giving that opportunity, and after that, price took off from the zone, and you can see it yourself. So if you have this kind of pattern, at what point should you make an entry? At least your entry should be around this zone. You can see it. Your stop loss should be above this spike. Stop loss should be somewhere here, and you know how to determine your target. You measure from the resistance line to the support line, and you take it to where the breakout occurred. See, put it right here. Target level should be somewhere here. Bring it down a bit. So if your stop loss is here and your entry is here and your target is here, then this is about 1.5 risk to reward ratio. So this is how you trade rectangular pattern. And sometimes you can let your profit run. You can see after hitting the target here, you can see this huge candle that closed beneath this place. So sometimes you can just close part of your positions here and allow the rest to run. So let's see. You can see after that, you can see how price is going. So you can see, imagine if our target is right here. The normal thing to do at this point is to close the trade right here, but sometimes you can enter multiple positions and allow some of the profits to run. So it's not good leaving money on the table. So you can close some positions right here and allow the remaining ones to run through. So how do you trade this other than trading the breakout again? Like I said, you can either sell at the resistance level or buy at support and take your profit at resistance level. That's when you are trading in the range, in the consolidation zone. So if you are trading the breakout, you have to wait for the price to break above resistance or below support line. Confirm the breakout with increased volume, like I've showed you. Then determine your entry, your stop loss, and the take profit level. If you are trading in the range, you buy at support and sell at resistance within the range. What are the common mistakes that people do while trading this rectangular pattern? The common mistake that most people do that I want you to avoid is jumping into trades without breakout confirmation, ignoring false breakouts, and overtrading within the range. So you must wait until there is a confirmation. You can see the confirmation, and the volume has to be sufficient before you enter the trade. You don't jump in when there is a fake breakout. You can see this point now. Immediately the candle broke this place. Imagine if you jumped into this trade, you see price reversed and closed as an indecision candle. After that, we have this bullish candle, we have another bullish candle, and we also have another bullish candle. At this point, your stop loss would have been taken out if you'd have entered immediately price broke this support. So it's good to wait, always be patient, no rushing into any trade. Wait until there is a confirmation. It's not enough for you to just wait until price breaks the support line. You have to wait until that particular candle closes. So if it closes like as it closed here now with an indecision candle, then you know that this is a false breakout. When you have this, you know this is a clear breakout, so no need to jump into the trade. Then another mistake is over trading between this zone. You know, after price entered this zone, it tested this resistance, it came down, tested the support, went up again, tested the resistance level, came down, did the same, came here, broke out, also broke out here before it went and broke out to the upper side, and after that the price gained some mojo and finally broke out. So you don't need to overtrade within this range. If you are trading the range, don't overtrade it. Don't assume that the resistance is going to hold forever, and don't assume that the support is also going to hold forever. So don't overtrade. Be careful when trading rectangular pattern. The best thing I advise you to do is to wait for there is a breakout, or you be careful trading the range. Now you know how to identify and trade rectangular patterns using breakouts and range trading strategies. Mastering this pattern can enhance your Forex trading results. If you found this video helpful, hit the like button, subscribe for more trading tutorials, and comment below with your questions or experiences trading rectangular patterns.